The soaring cost of living has resulted in South Africans turning to debt in order to keep their heads above water. Salaries are remaining stagnant as inflation as well as food and fuel prices soar, meaning credit cards and loans are being used for daily necessities. Is this a question of financial literacy, or is it simply a sign of the tough times? For more, I'm joined by financial advisor Basetsana Radipabe. Basetsana, appreciate your time at this evening. Just give us an overview of the struggles that people are going through, particularly because they lack financial literacy.
Well, good evening, Hugo. Thank you so much for having me on your show. So the major struggle is that really the lack of financial literacy begins at home, because what parents know, typically children know as well. However, in absence of parents having more information, it leaves the children stranded. And that leads to what you just pointed out, that a lot of South Africans are actually having to go into debt just to support the daily necessary needs that they have, that they cannot shift for another day.
So maybe let's rewind and define, what is financial literacy?
Well, financial literacy is basically just defined as the ability to understand typical financial concepts. Concepts such as inflation or interest rates, or how currencies, for example, drive markets, particularly if you're invested offshore. So those types of things, and even understanding the composition of South Africa's gross domestic product, or GDP. How does South Africa actually generate its economic growth?
So what are the implications of not being financially literate when you look at the challenges that South Africans are facing at the moment?
Well, there are vast, actually. There are quite a few. At top of mind, of course, is that one finds themselves falling victim to the unscrupulous so-called fly-by-night financial advisors that are out there in the world. That would be the first one. The second one, of course, lack of financial literacy means it becomes a generational issue as well. So in a world where we are supposed to be focused, particularly on building generational wealth, when parents don't have the necessary financial literacy levels required to teach the next generation, it means you end up with a family that has 3 to 4 generations that are actually poor, purely because of a lack of knowledge.
So when we talk about looking for information or being equipped with a certain amount of financial literature, you're a financial advisor, so if somebody has a private banking facility, for instance, then one of the things that happens is as soon as you literally open that account, there's somebody knocking on your door and saying to you, we've got this vast array of services, right? Now, if you don't have one of those facilities and you are the average individual on the street, how would you learn, or how would you become financially literate and serve to protect yourself and obviously protect your family?
First things first, social media. So a lot of young people today actually consume their financial news via social media sites such as TikTok. So begin there. So TikTok, Instagram, etc. So those would be the first ones, particularly for the people that don't want to go into news sites to consume their news, because sometimes it's quite technical. And the second source would be peers as well. So when you learn from your peers, chances are you're going to go back and teach your siblings, and also then teach your parents as well, to better equip them to make the financial decisions that they need to, particularly if they're heading towards retirement, for example, or they need to ensure that in the event that they pass away, the financial provisions they leave behind, particularly for minors and also the elderly, are actually taken care of, invested appropriately, and also secured.
That all sounds very, very high level, Basetsana. I mean, let's talk about Ugogo, who's in the rural parts of South Africa, where social media is not a factor, right? But let's also talk about stokvels and how many of the women who years ago, or men and women who started stokvels may not have been as financially literate as you might be, for instance, as a financial advisor, but they came up with these programs that allowed them to save or to purchase products in bulk because they were making a saving. So there was a certain amount of understanding. Now, how do we deal and how do we pass that information down from one generation to the next where social media is not an option?
Well, first, can I tell you, I myself am a member of a stokvel, actually, even though I have the so-called sophisticated financial products. So there, once again, to improve or to rather pass on the knowledge, the financial literacy knowledge, it starts right there. So today, rather than leaving the contributions that members make to a stokvel, they can actually open a social club account with with some of South Africa's banks today, and actually invest the proceeds rather than sharing it at the end of each month or distributing it to whoever is next in line to receive the proceeds. And it starts with perhaps leaving it in the bank as a start to earn a little bit of interest, because that's typically what a lot of clients will say, that I'd much rather leave my money in a bank that I know I can go to and go up to the teller and tell them whether I want to take my money out or not. But still, once again, so we need to transition from knowledge just passing down from the elderly to the young and start to pass up the knowledge, rather than just leaving it up to the elderly to teach us what we need to know, particularly when the youth begin to then enter the employment space or the workplace. There are a lot of things they need to understand there that Ugogo at home may not necessarily be able to understand. So it needs to go both ways, rather than only from the top down or from the elderly to the youth. It needs to pass up. It needs to go both ways.
Now, let me give you a typical example of a conversation I heard between a mother and her soon-to-be 12-year-old daughter. And they were debating on whether they should spend 10,000 Rand on a birthday party, and eventually agreed on, okay, here's 5,000 Rand, right, in lieu of a birthday party, and you can invest or buy shares or whatever it is. Now, one of the things that we're talking about is teaching younger people, certainly for the future, to be able to manage their finances. So that's a start as a situation. A 12-year-old has 5,000 Rand, or anyone has 5,000 Rand. How would you grow that money, or where would you put that money if you were financially literate?
So if you're financially literate, a unit trust, or what are called mutual funds or collective investment schemes would be my first choice if I wanted a little bit more growth, because banks don't necessarily give you the growth that you need over time, and clients actually become frustrated. And I actually have had to deal with this. I have a practical example. A client came to me and said, I've been putting money aside in a bank. It's not growing. I want my money out. Unfortunately, they then had to face a restriction period because it's a contract. So unit trust, if you're financially literate, put your money aside, give it time to work. So you need to be invested long enough to begin to see the benefit of investing rather than taking it out before time. So you need to watch what's called the investment horizon or investment period, and talk to or do a little bit more research as well. Upskill yourself as an investor if there's additional information or knowledge that you need to gather.
And finally, your advice to individuals who are struggling to the point that they are taking out credit in order to pay for consumables. What do people do when they're in that sort of situation?
So it's certainly a tough and obviously a heartbreaking situation to find oneself. But first and foremost, immediately stop taking on more debt. The cost of borrowing has been rising. Stop taking on more debt and begin to perhaps negotiate with creditors to see if perhaps you can lower your monthly installments. It may take longer for you to pay off the debt, but stop going into debt. Negotiate with your creditors before they call you. make sure that you talk to them first. But it starts with that single step. Stop taking debt. And I know that particularly in African communities, which, alongside the colored communities, actually have lower levels of financial literacy, it is tough because we do have to consider things such as a black tax, for example. So go back to that uncle that you give 500 rands now and then and tell them that you can no longer support them while they are not working. It's a tough conversation, absolutely has to happen. We cannot build generational wealth while we are held back by black tax. It has to be managed better.
Is that statistic confirmed that you mentioned a little while ago?
Yeah, so according to the South African Labour and Development Research Unit, the research actually showed that relative to white and Indian counterparts, African and colored households or counterparts actually have lower levels of financial literacy, and that's due to a myriad of factors such as the level of income, the level of education, how old they are, the type of job that they do, meaning that eventually those that work in the financial services industry typically have more knowledge or are more knowledgeable and therefore have higher levels of financial literacy.
Well, thank you for equipping us with that information. Financial advisor Basetsana Radipabe.